Hi everyone, Andrew Hewitt here, long-time friend and television/podcast counterpart of James Clyne, who's just going on to bigger and better things, and I'm delighted that he's invited me back to have a bit of a chat about some of the moves that are going on within Dillon Clyne. Jimmy, a name change, looks to be pretty exciting. Things are expanding, so obviously you must be doing something right. It's good to see you again.
Great to see you too, Hewy. Thanks for your time this afternoon. Yeah, over the last 12 months, Clyne Partners, which was based, my little practice here on Queen Street's moved in with a bigger firm called Dillon Partners, and we've become Dillon Clyne. It was time to expand our horizons and to see what we could do with more people under our belt. So we've been working together now for just under a year, and it's going very well.
And it's obviously not just about the name change, mate. I understand you've moved into some new digs. Talk to us a little bit about what it was like moving into the office.
Oh, yeah. Well, moving office, as anyone in business knows, is a bit of a challenge, but we found some great space on Bourke Street in the middle of Melbourne, which we're very pleased to be here. It's very sunlit and very modern for our staff to be able to do their thing. And we're just up on the top of, just near the corner of Queen and Bourke Street. If anyone knows that part of Melbourne, it's very modern and very good fun in here at the moment.
Well, talk to us about the expansion. What does it mean? I mean, obviously the name change is one thing, but what about the services that you provide?
Right, so people who know Clyne Partners, they've always known about our three pillars of offering, which has always been traditional tax compliance and reporting. And our outsourced solution, which allows businesses to effectively give to us their internal finance department, which is still growing to this day. And of course, our advisory, where we help clients with fundraising, debt raising, entry, exit, any sort of that. But with our merger, we've been able to add some more service offering, which I'm very proud to announce. Firstly, we are now considered superannuation experts. So self-managed super funds compliance and advice, we've got you covered now. And further to that, and the other great expansion is we have a financial planning arm as well now. So anytime you want to be feeling like you want to be investing, we've got the staff here to look after you. And that generates the wealth side of our motto now.
Moving offices, all exciting parts, but the people are really the heartbeat of Dillon Clyne, and you've probably expanded your footprint when it comes to the talent that you've got within the business as well. Do you want to talk to us a bit about that?
Yeah, thanks. When we were Clyne Partners, there was myself and my brother David Clyne and Pearl Chu. And that team still exists, but we're pleased to announce that we've got a new partner in Emil Knezovic, who's come from the Dillon side, Lou Bolzanello and Jared Dillon, who will bring a wealth of experience. They've been practicing together for 25 plus years. So we're adding in a lot of weight into our intellectual property here. As well as that, we've got a very strong secondary team, and we've got close to 45 accountants now working within our group.
Can you tell me a little bit more about what real-time strategic thinking is and how you deliver against that promise at Dillon Clyne?
Real-time strategic thinking is a bit of a mantra, a bit of an ideal that we'd like to bring across. And this is our point of difference with other accounting practices. Real-time strategic thinking is having the real data, the real information that is real and current to you in your business at the time you need it. It's not 8 months after the fact. It's not a year after the fact. It's real time. It's now. We work in our service offering to provide this sort of information when it's needed and how it's needed. It's always available, and it gives our clients the best effort and the best opportunity then to assess where they're at in their own business. Real-time strategic thinking is our internal motto about how we want to provide our services to our clients.
I reckon it's good to get a little bit of background around your journey too, James. So can you talk to us? Obviously, you're really proud about this latest merger, but maybe how did everything start for you?
Oh, that's a good question. I've been an accountant now for 27 years.
A long time.
I did all my training in some of the big international firms here in Melbourne and in the UK. And in 2006, I decided to head out on my own and started what was Clyne Partners back in 2006. And over that time, it really was just me and a laptop to start with. And I've been growing ever since and taking on partners as they come into my life and then growing with people. And we've been servicing and providing this service offering now since 2006. And on the Dillon side, they've been doing it since the late 80s. The journey's been very, very long, but very fulfilling as we take on new product offerings and new service offerings every year.
And I think that's good to hear, because I reckon probably new business are a real sweet spot in terms of your clientele. So knowing that you've actually come from, like you said, just a laptop and a desk, and now you're building it into what is really a multinational business. You're obviously the right sort of person to partner with your clients, particularly if they're starting up a new business.
Well, that's right. New business, we like to use the term around the emerging businesses, Hewy. And an emerging business challenge is always been in our area. I mean, relationships with accountants are very long. Normally, a relationship with an accountant lasts decades. So coming out into the new world, I was an emerging business myself, and I still think myself to be one, even after all these years. But emerging businesses challenges is certainly where we specialise. Certainly the area we got on, and we've got a lot of expertise and a lot of understanding and patience for the new business sector.
In your experience, Jimmy, and given the economic instability we're going through at the moment, is this a good or a bad time to be starting up an emerging business?
Oh, yeah, it's a great question. For me, it's never perfect. It's never a perfect time. The fundamentals of starting a new business is whether or not someone wants to pay for your product. Can you make money from what you're offering? And if the answer is yes, and that doesn't matter what sort of cycle we're in with the economy, if someone wants to give you money for the services rendered or the product rendered, it's now a good time. It's always a good time, and it's always a challenge.
Inflation can make people nervous, though. James, I know you've got a lot of insight into the current economic situation. Can you maybe give us, 3 key considerations for us to think about regarding inflation, and maybe are we or aren't we facing the reality of severe economic instability?
Inflation is a challenge for any economy, and the inflation that we're experiencing at the moment is pretty driven by international forces. Now, inflation is just the increasing of pricing of goods and services that are out of line to the earning capacity and the spending capacity of the people. And so what that means is there is a disconnect between the efficiency and the ability to produce goods and services versus the pricing. Now, in Australia, pricing has been around our energy sector, which has actually been a global problem. Energy sector has gone, and energy's gone up. So everything as a result in relation to fuel and gas and so on and so forth has to move with it. And the knock-on effect of that means that energy suppliers have to invoice more. We have to pay more. And then for us to pay more in business, you need to invoice your own clients more, and the spiral continues. And if that spiral gets too fast, what happens is it devalues the Australian dollar. It devalues our wealth to the point where people can't afford to do anything. And the economy health is all about its activity. If the activity stops because we can't afford to do it, then jobs start to go. And people's income drop because they can't afford you. And it spins out of control to this point where the economy becomes stagnant and grinds to a halt. And that's what a recession is. A recession is 2 consecutive quarters of negative growth, right? So if we can't afford to grow because it's getting too expensive, that's a problem. And this type of recession, which we haven't had since the early 90s, is a harder problem to solve than, say, the recession we had after the GFC, when the credit market just went a bit pear-shaped, or even after the pandemic, when people weren't allowed to work, right? They were easier fixes than a inflationary caused recession. So what that means is, and the challenge is for us, is to keep pace and to understand the knock-on effect to your cost structure. As an example, businesses with debt, and everyone's feeling this in their own mortgages for starters, but businesses with debt have found that their repayments to the bank are going up just as quickly as the mortgage repayments are. So there's a great challenge to understand your financial structure of your business. Is the debt instrument the right tool for your business right now? That's the big question. The second knock-on effect of that, because everyone's mortgages are going out of control, staff are walking into their boss's office and asking for more wages. And the lack of professional services in this country, in all sectors, in construction, in finance, in all of them, is that there's a wage pressure. And this is also fueling the inflationary pressure, the spending that's going on, which is outdoing the efficiency. So what we're trying, as a small business, we really must be thinking about our wage position, 2, our debt structure and our capital structure within the business. And what I mean by that is, as I said before, debt instruments may not be the best one. Is there an alternative? Capital funding, for example. And then there's, of course, the good old-fashioned review of your profit and loss to ensure that you've got the right cost structure in place. And the great challenge, and here's the big one, is are you pricing your product or service correctly? Right? If you've got wage increases, you've got overhead increases, you are at some stage going to have to push forward with a price increase. And that means going back to your loyal customers and asking for more, which is one of the hardest things to do in small business.
So you've given us some great pointers there, but is the motto, if you are running an emerging business today, all about maintaining the business, or should you be looking to grow the business in the face of inflation?
I still think there's growth and opportunity in the market for any product because people are still spending. Right, the point of inflation is people are still actively moving too quickly within the economy. It's not like in a recessionary position, say pandemic recession, when no one could actually do any business. This time we've got too much business going on. So if you can get into the market and provide an alternative either on price or on service, there is still a lot of activity to be had here. And so I think it's a good opportunity to maybe get into the market, but the challenge is understanding your cost base and how you're going to deliver that product. That's actually the harder bit.
You talked about the bottom line. When it comes to taxes, what are some things that you're encouraging your client base to do in relation to, making sure we're, doing the very best we can with the current taxation environment?
Yeah, it's a really good question. Over the last 3 or 4 years, the Australian Taxation Office has been quite lenient with businesses and their ability to pay the taxes owing. And what we're talking about here is GST, the PAYG on your wages, and income tax. And they've been quite lenient saying, well, if I can't pay this quarter, you can catch it up next quarter. Well, that regime is sort of coming to an end. Further with these inflationary challenges in our economy, the ATO is trying to recover the debt owing to them across the economy to ensure that there's not too much money being spent in the economy. And so what I'm trying to say is that if you're carrying debt with the ATO, they're being more aggressive on recovery. Now, it's nothing to panic about. It's just more dirty letters and more phone calls and things like that, which is fine. The ATO is still not in the business of shutting down business. They're in the business of creating more business, but they are expecting you to be on top of your taxes always. So what we've been advising with our clients over the last 6 months is very, very clear. Discipline and paying it. Get in front of the taxes, paying it when it's not even before it's due, paying it when you actually incur it. And the example of that is what we've been encouraging with clients is when you make the payroll, you pay your employees, you pay the taxes, and you pay the super at the same time. Use the real cost of employment at the time that it's being incurred. What that means is it doesn't accumulate over a period of time. You don't get to the end of your quarter and having to find 50, 60, 100 grand to make it happen. You've already covered it on the way through. Taking small bites of your tax bill over the year is a hell of a lot easier to manage than trying to do it 4 times, 5 times a year. So the concept of tax is, yes, you structure up and get the best tax effect, but the real risk around taxes is actually not on the income side. It is actually on your employment and superannuation side, because the ATO are really, really claiming in on that one right now.
Jimmy, there's a lot of apps out there. I think technology can benefit all of us, but only to a point. What's your view on technology being the only level of support for small business owners who are looking to take accounting and do it themselves?
I think that's a great question on the basis that I love the technology that's come into our sector. And when you have emerging businesses with high volume of invoicing and transactions, and let me give the example, if you're selling a particular product at $25 each, but you're selling 1,000 of them a month, that creates a challenge in the actual paperwork to keep up with that. In contrast to, say, if you're writing one $20,000 invoice per go. Technology is getting better in every month. There's a few software platforms out there which effectively automate up to 85, 90% of a transaction. And this has become quite key for the emerging business space to enable them to focus on their business and not being caught in the data of their business. Further to that, privacy laws in this country are getting stricter every quarter or so. So protecting your clients' personal data and their credit cards and their financial information is also incredibly important. Emerging businesses should be engaging in professional payment gateways and they should be investing and their time and effort into appropriate accounting software that does a lot of the transactional work for them. It also manages their performance and it manages their tax obligation. Not engaging in this process always snowballs into a problem. So we here at Dillon Clyne have solutions around software platforms that we can apply to our clients' needs and implement the automation that is required for them to run it efficiently. The data that we're talking about here is reactive. It's not actually, it doesn't actually give you a lot of insight into the profitability, your margins, and of course your growth strategies. But having automation allows you to get that historical stuff sorted, to allow you to spend more time on the next bit and to understand what your strategy implementation is. Real-time strategic thinking is about having that data in place and ready to analyse, ready for your next step.
So it sounds to me, Jimmy, we always get told with investment, right, or with our superannuation, don't put all your eggs in one basket. So what I'm hearing from you is technology plays a role, but there's also that human element of business growth strategy and that discipline around your accounting practices.
Well, that's spot on, and it's all about having the right tools to achieve what you actually want to achieve. Like, what are we doing here? I ask this question a lot. What are we doing? What do you want? Some people just like a lifestyle business, which is fine. Some people would like to take over the world with their product, and that's fun. But if you don't have these fundamental key things in place, you're not going to be able to move forward. You'll always be looking behind you.
Always great to talk to you, Jimmy. You've got a wealth of advice. Obviously, we've got to have the call to action, let people know how and where they can hit you up if they want to get some business advice from you and the team. But where do they go?
I think the best place to find us is online. I think our website, www.dillonclyne.com.au, and of course, LinkedIn. All our contacts are there. Please ring into the office if you want to have a chat. Just ask for me personally, and I'll be more than happy to have a go.
Or you can look Jimmy up on his Instagram page. It'll blow your mind. Jimmy, thanks.